I'm Amy Anderson for the OptionRally News team. Let's take a look at the global market highlights and news that all traders and investors should be aware of. US Automakers take a beating. Global stocks tumble as investors run for the hills, and crude oil plunges on weak US data. Let's take a quick look at what's happening in the global markets now. Markets collapsed around the globe on Monday as lackluster earnings and the emerging nations crisis weighed on investors. U.S. data printed below expectations, sending Wall Street plummeting, with the Dow giving up over 300 points. The S&P 500 and NASDAQ were also down more than 2%. Investors were disappointed after the Institute for Supply Management's monthly index showed that manufacturing activity last month expanded at its weakest pace since May. General Motors fell 2.3% after January vehicle sales slumped 12%, while Ford declined 2.7% after its January sales dropped 7%. January is typically the toughest month for car sales as showrooms empty out following big year-end sales in December. But unusually brutal winter weather this year kept people at home and even delayed delivery of sales to government and corporate fleets. Asian shares fell following the latest official data for the Chinese manufacturing sector, which indicated a modest slowdown in January, while European markets also closed lower. In the foreign exchange markets, the greenback gained in early Asian trade this morning after suffering a sell-off in New York in response to unexpectedly weak U.S. manufacturing data that raised concerns about the economy. The dollar bought 101.22 yen, up from 100.94 yen late in New York, but well down from 102.31 yen in Tokyo earlier Monday. The euro was mixed at $1.3518 and 136.86 yen. U.S. currency markets were jolted after the Institute for Supply Management's Purchasing Managers Index sank to 51.3 in January from 56.5 in December. A figure above 50 indicates growth, and anything below points to contraction. The latest figures throw the focus on U.S. employment figures due this week as investors look to gauge the state of the economy as the Federal Reserve winds down its stimulus, citing a firming recovery. There is a lot of data ahead this week, with both the Bank of England and the European Central Bank meetings on Thursday and the non-farm payroll report on Friday. Moving to the commodities market, gold prices gained by more than 1% yesterday on the recovery in the gold ETFs holdings managed under SPDR Gold Holdings Trust. Further weakness in the DX acted as a positive factor. Gold traded at $1257.20 at the close. NYMEX crude oil prices declined by more than 1% yesterday on the plunge in manufacturing data from China. UK and the US indicated concerns over demand for the fuel in near term. Manufacturing activity in the US is at the lowest level in the last 8 months. Further weak market sentiments exerted downside pressure on the prices. Crude oil ended the day at 96.40 after the data releases. This is Amy Anderson from OptionRally signing off. Follow me on Facebook and watch for our new financial terms of the day and our weekly news events.